$340,000. The lifetime fee drag on a typical 401k. Gone. You never saw it. 6% of participants read the annual fee disclosure. The disclosure your plan sends every year. The document that reveals the skim. There aren't one kind of fee. There are 4 layers. Expense ratio, administrative fee, revenue share, advisor fee. All of them stackable. 4 layers. Today we walk through each one. Where to find it, how to kill it. What 1% of fees compounds into over 20 years. William Sharpe, Nobel laureate. A 1% annual fee eats 28% of your endpoint across 30 years. 41% across 40 years. This is your money, not your plans, not your advisors. And today you're going to claim it back. 1 hour of attention. $100,000 recovered. Best hourly rate of your life. Imagine a faucet dripping in a distant room. You never hear it. 20 years later, the floor is rotted out. Fees drip every quarter, a fraction of a percent. Fractions of fractions. You don't see the line item. Your balance just grows slightly slower than the index. 3 paths. Same market. Only fee changes. Over 20 years, the 1% investor has 80 cents on the dollar. The 1.5% investor, 73 cents. That's the compounded drip. $124,000. The average 401k participant pays this in fees over 20 years. Invisible. Quiet quarterly. Invisible compounding against you. That is the structure of the fee drip. 109 basis points. The average combined 401k fee per Brightscope 2024. On a $100,000 balance, $1,090 a year. Silently. Strike out the average. 30 basis points is achievable. Inside most existing plans with just fund selection. 3 times cheaper, same accounts, same contributions. Fund selection is the single biggest lever. 70% reduction achievable. 1 afternoon, inside your existing plan. 1 afternoon. Next, the 4 fee layers. In order. Before the 4 layers, 1 note. Free fee audit calculator. Link in the description. Paste in the numbers from your plan's annual fee disclosure. Returns your total annual fee drag and 20-year lifetime loss. Most people see between $80,000 and $160,000 of silent loss. Now, Layer 1. Layer 1. The expense ratio. The obvious fee, printed on every fund fact sheet, still invisible to most investors. Index funds, 3 to 10 basis points. Active, 60 to 120. Variable annuities inside 401ks, 150 to 250 basis points. 25 times more expensive than the index. 55 basis points. Median active fund inside a 401k. If your current fund is above that, you have above average drag. Switch the active funds for a total market index. Your 401k plan almost certainly has one. It might be called large cap index, or have a fund family name like Vanguard or Fidelity attached. Daniel, 48. Engineer in Denver, $340,000 in his 401k. All in a target date 2045 fund, charging 48 basis points. Daniel switches to a 3-fund portfolio. Total stock market, international, and bonds. Weighted expense, 4 basis points. Annual savings, $1,496. Compounded to age 65, $140,000. 1 form. $140,000. Daniel spent 20 minutes on a Saturday. You can too. The target. Total weighted expense ratio, under 15 basis points across your entire portfolio. Achievable in 90% of 401k plans. Layer 2. Administrative fees. The one your plan doesn't advertise. Charged to keep the lights on, often skimmed from fund returns. 2 forms. Flat fee, $30 to $100 per year. Asset-based, 0.25 to 0.75%. Asset-based is nearly always worse. 45 basis points. Median admin fee on mid-sized plans. On a $300,000 balance, $1,500 per year, on top of your expense ratios. Ask HR to quote the plan at a flat fee admin model. Many providers offer both. Switching saves the plan, and you, thousands. Make the ask. 3% of participants have ever asked HR about the admin fee structure, which is why plans can charge whatever they want. Megan, 52, HR rep at a 200-person company. Balance, $450,000. Admin fee was 42 basis points, $1,900 per year. Megan brought the benchmark to her plan committee. They solicited 3 new bids, switched record keepers. New admin, $65 flat. $1,823 per year saved. Per participant, 1 HR meeting, 200 participants. $360,000 a year recovered across the company. Megan's HR team got a bonus. Ask for the 40405 fee disclosure. It's federally mandated. Your employer has it. The number in the admin fee row is what you're actually paying. Read the form today. Layer 3. Revenue sharing. The kickback layer. Fund companies pay record keepers to be on the plan menu. Cost embedded in your expense ratio. Legal. Deceptive. You pay the fund a higher expense ratio. The fund kicks some of it back to the record keeper. You're subsidizing plan administration with extra fund fees. 25 basis points. The typical embedded revenue share inside an active mutual fund. Detectable via the fund's share class suffix. R6, I, A, and so on. Share classes. R6 or institutional, no revenue share embedded. R3 or advisor and 25 to 40 basis points embedded. A shares, 100 basis points or more. Ask your plan for R6 share class. Same exact fund, same manager, same holdings. R6 share class, half the fee. It's a plan-level decision. You can advocate for it. $67,000. The typical embedded revenue share cost across a 25-year career. Your fund is quietly paying for your plan's admin, out of your return. 41% of plans offer institutional share classes. The rest don't, because it would break the kickback economics. Email your plan committee. Request R6 or institutional share classes for every fund on the menu. Most requests get approved because they comply with the fiduciary duty required by ERISA. Your plan's fiduciary committee has a duty to choose the cheapest available share class. When you ask, they must document the answer. And lawsuits in the 2010s established this. The ask is free. The switch saves a fortune. Layer 4, advisor fee. Optional, often unnecessary. Sometimes helpful, but usually the single biggest drag on wealth for a DIY-capable saver. 1% of assets. Standard AUM fee. On top of the expense ratios, on top of the admin fee, on top of the revenue share. Layer 4 stacks highest. Stack them, 0.55, 0.45, 0.25, 1% advisor. Total 2.25%. Sharpe says that eats 60% of your endpoint. 60% of your endpoint. Gone. From stacking all 4 layers at average industry rates. Alternative. A flat fee advisor charges $2,000 to $5,000 a year, not a percentage of assets. The savings on a $1 million portfolio. $5,000 to $8,000 per year. 3 tiers. DIY with index funds, $0. Flat fee advisor, $3,000 a year. AUM advisor at 1%, $10,000 on a $1 million portfolio. Same advice quality. Radically different cost structure. Match the fee to the value. An advisor who designs a 1-hour tax plan is worth $500. An advisor who clicks rebalance once a year and charges a percentage is robbing you. When is an advisor worth it? Estate complexity, business sales, special needs trust, unusual inheritance. Pay for one-time depth, not ongoing asset management. One-time depth, not ongoing skim. That's the rule. 3 moves tonight. 1. Pull your 40405 fee disclosure tonight. It's in your plan portal. 2. Switch target date and active funds into total market index. 3. Email your plan committee to request R6 share classes. $340,000. Recovered. For 60 minutes of attention. Same employer, same job, different outcome. That's the math. If this breakdown helped, subscribe. I publish a new one every single day. Secure your license to chill. Fix the wealth drain today.